Trump imposes tariffs again. In fact, 35% on Canadian imports. Not really positive. Let's see how it goes. Chinese data this week, very important. Just to see whether or not that economy is starting to pick up or whether it's starting to slow down. Something to focus on towards that later in the week. US government reported a $27 billion budget surplus in June. Pretty positive, but what does it actually mean? Also in the States, we've got the US CPI data out on Tuesday. Last month's report was 2.4%. The consensus is a slight tick up of 2.6. That's really important because as we do start to go a little bit higher, there's these policy implications the power's going to have to deal with. Our expectations are for inflation to tick a little bit higher. So let's dive right into it. As we mentioned, 9th of July was over. Trump administration came in and started to put in the tariffs. Bit of a tip happening with Canada at the moment because no deal's been done. But Trump decided to put a 35% tariff. Not only that, 50% tariff on copper. So it remains quite volatile. But we're yet to really understand the fallout of how these tariffs are going to affect global demand and also how these tariffs are going to affect global GDPs and growth. So I think quite interesting. But if we look at really why Trump has actually put in these tariffs, like most of Trump's policies, we feel it's always short term. It's not long term. And when we look at that budget surplus which they've recorded, the headline says it's great, but the market's a little bit wiser. The market's actually said, well, that doesn't make sense. In fact, it doesn't. That surplus there, and if you take in normal timing, pretty much normal times and more events like other duties and payments, healthcare and all that, which actually was the deficit. But the fact that it's sort of revenue coming in, imagine if we didn't have that revenue, how bad the picture would be. And this is where we get this sense of concern about the economy. Because is it a true economy in terms of GDP growth? Or is it just being fabricated? And we do get this sense that it is perhaps a little bit fabricated. But that's the way the market's looking at it. And that's why equity markets taking to record highs, because we're only seeing what they feel tomorrow, not the next day, the next day, the next day, how they feel the economy. But I think that will actually come to play. When we look at the customs duties in the States, year-to-date gross custom receipts hit a record $113 billion. This underscores how much reliant the US now is on tariffs to help plug the fiscal gap. This is a short-term measure. It does mark a substantial reversal from previous decades, but this is an injection that the Trump administration, and in our mind, it's like drugs. Once you open it, once you start, you can't stop. How are you going to reverse such a policy when your current account is reliant on it? And to me, that's one of the biggest issues which we've got to face with, because he's opened the cat. He started taking the drugs and he won't stop. And to me, the broader implications of this move are quite far-reaching. From all the notes that we've done over the last couple of weeks about this point, it is critical. You can't stick your head in the sand. You've got to look at it. I don't think people are, or not yet. But that's all about trading, because you try and work out what the timing is. And that, to me, is the issue. So far, it hasn't come off. But I think people will start to focus. They'll focus on how this fiscal tool, is not sustainable. Just imagine if we started price move high, a little bit of inflation. What's the federal government going to do? The Fed. What power? It's going to keep interest rates higher. We won't get that two moves or even one cut. We won't get any. So how will the market actually react to that? I guess the surge in customs receipts has provided Treasury with a short-term buffer, or I would say a short-term fix. It does show how deeply fiscal stability now is entwined with trade flows. So you can't turn it off. Plus, we're going to get geopolitical issues. And that, to me, is a major issue. Trade concerns, not just for the big economies. What about the smaller economies? Those economies that rely on the US for imports. What will they have to do? It's a changing feast. And that underscores also the volatility that we're seeing in the market. I do expect Trump will keep pushing on this. This week, we expected more letters to go out to countries, new tariff rates, and also including in the EU, although we thought we've come up with something. But also this week, it's dominated by the new earnings seasons. We've got results from JP Morgan, Bank of America, Goldman Sachs, and earnings due for things like Netflix and 3Ms. Plus, we've got a lot of data. So it's going to be a pretty important week this week for a lot of traders. And I'd expect it to be quite volatile. And I'd also expect to see some pretty significant moves, but also some changing thoughts, changing trends. So it'll be quite interesting.